What's up, Coach B here. This is Last Week in the Markets, where we look at what actually happened and pull one lesson out of it. Let's start with the number. Moderna, ticker MRNA, was up almost 34% this week. 33.5% to be exact, from about $59.75 up to $79.76. And here's the thing, it wasn't even alone. This was a week where the stocks everybody had left for dead came roaring back, and I want to show you exactly why, because it is the flip side of a lesson we already covered. Here's the driver. On Thursday, we got the June jobs report, and it came in soft. The economy added around 57,000 jobs against an estimate closer to 110,000. Unemployment actually ticked down to about 4.2% from 4.3% in May. Though part of that is the labor force itself shrinking, participation dropped to around 61.5%. Either way, it's a soft labor market. And a soft labor market means the Fed has more room to cut rates. So instead of selling off, traders lean back into the market, betting that cheaper money is coming. Now, here's where it gets interesting and where you have to look past the headline. Let's look at the actual tape. This was a short week, Thursday the 25th through Thursday the 2nd, since Friday was the 4th of July holiday. The S&P 500 through SPY was up about 1.4%. The Nasdaq 100, the Qs, was actually down about 0.5%. Small caps, the IWM, were down about 0.4% too. And the Dow, the DIA, was the real leader, up 1.7% and closing Thursday at an all-time high. So this was not a broad growth rally. If anything, the index that should have led a real growth rally, the Nasdaq, was slightly red. Now what about fear? The VIX actually fell this week, closing around 16.15, down from about 18.9 the Thursday before, roughly 12 to 14% lower, and it stayed calm, under 20 the whole way. That's a real signal. Fear didn't spike and crash, it just steadily drained out of the market. So if the indices were mixed and the Dow just hit a record, where did all that relief actually go? Let's run the winners and losers, because this is where the real story is. This week, the board flipped completely green. And I mean the specific names that got hammered a couple weeks back. Moderna led the way, up 33.5% on a 9-0 positive vote from an FDA advisory panel. Now I want to be careful here, because that panel vote is not the actual approval. The real decision, the PDUFA date, isn't until August 5th. So that's a huge move on an event that technically hasn't happened yet, worth remembering. Rivian, ticker RIVN, was up 25.5% after beating its delivery numbers for the quarter and raising its full-year guidance. Rocket Lab, RKLB, gained about 24.5%, continuing a run that's been building on analyst upgrades. Palantir, PLTR, was up 20.5% as the AI software trade re-rated back toward its highs. Tesla added almost 5%, and NVIDIA, interestingly, was basically flat, down about 0.5%, the one name on our board that didn't get invited to this party. Let me show you the week's biggest single move on a real chart. This is Moderna. It closed Thursday the 25th around $59.75. Then it started climbing, 67, then just under 70, then 70, then 72.5. And by Thursday this week, it closed at $79.76. That is a steady climb, session after session, not one gap up spike. When a stock walks up like that on an advisory vote and the actual decision date is still more than a month away, that tells you the market is pricing in a lot of optimism ahead of time. Okay, here's the teachable moment, and it is the mirror image of what we talked about last week, but the mirror's in the single names, not the index tape. Last week, a hot inflation print spooked the market into rotating out of expensive growth stocks and into safer small caps in the Dow. This week, a soft jobs report cooled that same fear, but it didn't show up as some broad rip across every growth stock in the market. The Qs were red, the Dow hit a record. Instead, the relief went somewhere specific. It went straight into the exact names that have been crushed the hardest: Moderna, Rivian, Rocket Lab, Palantir, all up 20% or more. That's the tell when the broad index that should lead a real growth rally is actually red, but the beaten up momentum names are ripping 20, 25, 30%. That's not a market-wide move. That's a targeted snapback in specific oversold names. The lesson is simple. The stocks that fall the hardest when fear rises are usually the same ones that rip the hardest when fear fades, even when the rest of the tape barely moves. It's the same mechanism running in reverse. Your job isn't to guess which stock moves next, it's to notice which regime you're in, because that tells you which bucket of the market is about to move. That sets up tomorrow. In last week, we look back. In the week ahead, we look forward at what's on the calendar, coming off a short holiday week, and whether this risk on mood has legs. So come back for that. If learning to read a rotation and knowing when the fear that drove it starts to fade is the kind of thing you want every week, subscribe. And last week in the markets will be right here for you each weekend. Quick reminder before we go. This is education, not financial advice. I'm not telling you to buy or sell anything. Do your own research. Every ticker here is just a teaching example. That is the week. Good luck in the markets, no matter what stock you're into.